Hello, everyone. Thank you for joining this evening. My name is Tanya Shadoan, and I am the Federation's Managing Director of Philanthropy Operations and Impact Investing. I'm delighted to welcome you to our second annual Investments Performance Review. We have a terrific agenda for this afternoon and a number of speakers, and we're also looking forward to hearing your questions. If you go to the next slide, Christina. I'll walk you through the agenda briefly. We'll do an overview of investing and deploying capital. We'll then cover performance of our ESG pools and our core investment pools. And then we'll move into an update on JLens, which was new this past year to our portfolio options. And we'll conclude with an update on impact investing. And as I mentioned, you can put questions in the chat. We'll take your questions along the way in each section, or you can hold them for the end when we'll have time for questions at the very end. We have a terrific lineup of speakers this afternoon. It's a really integrated team, members of the Federation staff on the left side here, myself, Rebecca Randall, who heads up our our advisory practice. Just got another guest joining us. Andrew Schneiderman, who works on impact investing with me, and Greg Nietzschen, who's a member of our investment committee and an expert in the impact investing space. Then we've got our Mercer team, who we've been working with now for 2 full years. We selected them as part of a competitive RFP process to help us reimagine and design our DAF investment strategy. They have been terrific partners all along the way and are available to us as professional staff, as well as to our fund holders if you have questions or would like to discuss your portfolio with them. And finally, we have Danny from our JLens partnership team. Unfortunately, Julie was unable to be here with us today, but Danny will represent the JLens team. So with that, I will turn it over to Rebecca Randall, our new Managing Director of the Philanthropy Advisory Practice.
Great. Thanks so much, Tanya. It really is a pleasure to be with you all today, and I too am delighted that you took the time out of your busy schedules to join us. As Tanya shared, I'm the Managing Director for Philanthropy at the Federation, and I've only been on the job for about 7 months. So if I have yet to meet you, I would love the opportunity to do so and encourage you to reach out. It also means that although I've spent a bunch of time on calls with our colleagues at Mercer, this is my first annual performance update webinar. And since one of the reasons I joined the Federation in the first place was because I was so impressed with its impact lending work, I'm particularly excited that we're going to be focusing on how we can invest and do good at the same time. The Jewish values that drive our work at the Federation, like tzedakah, giving with just intention, and tikkun olam, healing the world, are in perfect synchrony with a strategy that combines grant making and investments to make big systemic changes. And I truly believe that with the guidance and involvement of people like Greg and Danny and our partners at Mercer, our local Jewish community can lead the way in this burgeoning field. So without further ado, I will pass the mic to Greg. Thank you all again for joining us.
Great. Thanks, Rebecca. And hello, everybody. My name is Greg Nietzschen. And as Tanya said, I am the lay leader, volunteer, chairing the impact investing work that we're doing at the Federation. I also sit on the endowment and the investment committee and probably some other committees that I've forgotten about. But like you, I'm sort of all in on the Federation. My day job, which is why I'm joining here, is I'm the managing director of Kennyarth, the family office of Diane Eisenberg, and in that role, we are one of the largest, most focused impact investors in the market. So my volunteer work here is really an extension of that work, and it's been just an absolute joy to be able to work with Tanya and Andrew and Rebecca and the entire team to help the Federation develop really world-class capabilities in this area. So I just want to take a minute up front here to say that we're really not just here today to talk about investment performance. We're really here to talk about how we at the Federation can help all of you achieve philanthropic priorities in the most strategic, highly impactful way that you can. And I'd say if there's really one thing you take away from the entire presentation today, it's this. It's that we in the philanthropic sector are moving on from an era when philanthropists and foundations and DAF holders could just invest money in a purely conventional way to earn as much as you can, so that they could deploy just a fraction of those assets, just 5% or 6% of those assets every year in grant dollars. We're moving away from that, and we're moving toward an era when really sophisticated dynamic donors think about the entirety of their asset base and what it can do for the missions that they hope to achieve. So we're here today to talk about how you can both invest your capital in a mix of conventional and values aligned opportunities like you'll hear from JLens, and how you can actively then deploy your capital for its philanthropic aims. And that philanthropic deployment may mean grant making, and it also may mean impact investing alongside that grant activity to achieve those aims. So that's it. That's my message, is to really open your mind to these possibilities that can be achieved when you think broadly about the totality of the dollars that you have in your DAF. That you look for opportunities where capital can be invested and recycled as a tool of your philanthropic mission. And Andrew is going to talk about the impact lending program and how we're going to show you some of those opportunities, and help us with your feedback over time, to continue to push this frontier of what's possible when donors really look to utilize the full set of tools at their disposal to achieve impact. So with that, let's dive into it, and I will pass the baton over to Neil at Pavilion to begin a discussion of performance.
Great, thank you. Maybe we can go to the next slide here. And in terms of performance, we're going to be focusing on the traditional investment pools and the values aligned investment pools over the next few slides before we go hand it over to JLens. If we turn to the next slide, maybe just before continuing, the audience here today may be asking, I think this is the Pavilion team, who is Mercer? And you're not crazy. In previous webinars, our team was referred to as Pavilion. Recently, our business rebranded, dropping the Pavilion name. The Pavilion name came from a firm that Mercer acquired a few years ago, but subsequently the decision was made to retain the Mercer name and drop the Pavilion name. But I think what is most important is that this was merely a name change. Our team, Corey, Texas, and myself remains intact, as does all the resources behind our team that we leverage for the benefit of the Federation. So to expand on what is meant by values aligned investment pools, specifically here we're talking about the long-term and moderate-term ESG pools. And the ESG pools are utilizing strategies, right, that take into account environmental, social, and corporate governance considerations. This approach are really, offering ESG pools to the Federation's funders provides the opportunity for funders to allocate capital in a way that has a positive impact really on these three different areas. Market returns are the single biggest determinant for performance of the Federation's investment pools. I'm going to cover a few asset classes here, starting with global stocks, which is towards the top of the chart here. It's the second to top row. Global stocks, which really is a combination of U.S. large cap stocks, international large cap stocks, and emerging markets, registered very strong returns for 2021. They were up 18.5%. There were disparity in returns across asset classes. So looking underneath the hood of global stocks, U.S. large cap stocks were up 28.7%, followed by international large cap stocks, which were up 11.3%. And then emerging market stocks at the bottom of this chart were actually declined 2.5% over the 1 year period amid economic challenges coming out of China. U.S. investment grade bonds really here's it's an important asset class because both the long-term and moderate-term pool have sizable allocations to varying degrees. But U.S. investment grade bonds really represents fixed income, broadly speaking, as interest rates headed higher over 2021, that detracted from bond returns, and bond returns returned negative 1.5% for the year. Okay, so the long-term DAF pools, and I'm going to draw your attention to the top part of this slide here. The long-term ESG pool is on the left side. The long-term passive pool is on the right side. And then there's various colors that correspond to different time periods. The green bar corresponds to 1-year returns. The blue bars correspond to 3-year returns, orange to 5 years, and gray to 7 years. I think the big takeaway here is that returns have been robust and consistent with what we've seen across stock markets. Pretty much across all the time periods, returns have been in the high single digits to low to mid double digits. If we look at the bottom part of the slide here, this is the asset allocation. The asset allocation corresponds with the time horizon of these two pools. And you'll recall that these two pools are really designed for long-term philanthropic capital. So the asset allocation for both of the pools, 70% is allocated to stocks, and then the balance, or 30%, is allocated to bonds. One other dynamic that I would be remiss in not calling out is that the long-term ESG pool over the short term has underperformed the long-term passive pool. The long-term ESG pool is structurally underweight energy. Energy over the past year and a half has been one of the strongest performing sectors. And in those types of environments, we expect the long-term ESG pool to underperform. We don't have any concerns about performance. Relative performance between the two pools is going to fluctuate. Sometimes sectors like energy are going to be in favor, or sometimes they're going to be out of favor. But based on really exhaustive research, we really believe that over a full market cycle, long-term, or I should say ESG performance is going to be competitive with its counterpart of non-ESG strategies. Maybe we want to go to the next slide that talks about the moderate term and short term pools. Again, the top part of the slide here, I'm going to draw your attention to, there's really 3 sections here. The first 2 sections, the section on the left and the middle section, that's titled moderate term pools. Moderate term ESG pool and the moderate term passive pool. Strong performance across pretty much all of the time periods. Albeit moderate performance compared to the long-term pools. The moderate term pools are designed to be more conservative relative to the long-term pools. These pools are really designed for funders with a time horizon in the range of 2 to 5 years. So the asset allocation, as you can see on the bottom here, is going to be more skewed towards conservative asset classes like bonds. So 35% of these two pools are made up of stocks, and then the balance, or 65%, the majority of these pools are actually made up of bonds. But going back to performance, over all the time periods, mid single digits to low double digits, particularly over the 3-year period for the moderate term passive pool. And then lastly is the short-term pool, which is on the far right side of the slide here. The short-term pool is really designed for donors that have a shorter term time horizon, really less than 2 years. You'll notice from the pie chart on the bottom, 100% of the pool is made up of money market securities. So really capital preservation first and foremost. So you're giving up return for security. And as you can see, the short-term pool returns over pretty much all the time periods have been in the range of 1%.
Thanks, Neil. So hello, everyone. I wanted to circle back just quickly to the title of the webinar today, which is Investing Your Donor Advised Fund capital for good. And Neil just provided you some details around the financial good that your DAF assets are experiencing, but I'm going to provide you some meaningful and measurable ESG, or going back to that environmental, social, and governance good, or outcomes that come alongside that financial return. And I think it's important to mention that the Federation's focus and implementation of ESG is really very consistent with industry trends that have really picked up some steam here over the last decade. And as more and more institutions are really focused on alignment of their values or their missions with their investments to help boost their non-financial returns, or good, as I'm kind of referring to it now. So what are these measurable ESG goods? And Christina, if you wouldn't mind going to the next slide. These ESG goods or outcomes that I keep speaking about, here's a sampling of really 3 of the specific outcomes that we've been measuring within the pools to provide funders indication of those non-financial impact that your assets ultimately are supporting. The Federation has been very intentional about partnering with investment managers that are leading the industry in terms of their ESG strategy, which has translated into very high ESG scores for both of the pools, the long-term and the moderate. Additionally, these investment managers are investing in companies that are doing good by achieving direct sustainable impact at more than 2.5 times that of the market. And then last, they're also leaning in towards companies that can be viewed as cleaner as measured by their CO2 emissions. So to fully illustrate those last 2 outcomes, because I know it can kind of be a little challenging in terms of some of those metrics that I just described, but we wanted to show you and measure that good that the companies are doing. And how we did that was by quantifying the amount of revenue that the pool's investments have derived from activities related to solving the world's major social and environmental challenges, which, as I mentioned earlier, is about 2.5 times more than the broader market, or standing right at about that 10% of direct revenue exposure. Secondly, the pools are also seeking to avoid the bad. So specifically, when I speak about bad, they're avoiding fossil fuel emitting companies and channeling a lot of that capital to companies that are focused on renewables. So therefore, the companies held within the pools are emitting meaningfully less carbon than the broader market, as we've measured again here by those CO2 emissions. Now, we know that these are just a few ways that we are using to gauge, again, those non-financial successes within an impact within the pools. And we realize that there's much more impact and other ways to further align these pools to achieve within the investment pools. And we will continue to focus on these themes, as well as some new ones over the short intermediate term. And I would like to hand it over to Texas right now to provide you a little bit of forward guidance on and details on those themes.
Thanks, Corey. So on this slide here, we show 8 themes that are really top considerations that we have been working with globally for our entire client base that are endowments and foundations, of just things to think about and things to maybe prepare for. Things like theme number 1, emphasizing inflation protection. We all know that inflation is higher. We see that in the headlines. Do we think it's sustained? Well, maybe not necessarily. But that it could have an effect on portfolios, in particular bonds, and there may be some ways to help protect on the downside if there is higher inflation and higher rates. So that's one of the sort of short-term tactical things. There are other things like that are much more strategic and maybe mission aligned, like themes 2, 3, and 4, incorporating diversity, equity, and inclusion, statistics, benchmarking, baselining, and then improvement in the use of managers that have teams and ownerships that are more diverse than we currently have. That's something that I think the entire industry is going through. 3 and 4 are related. Investing with impact. We'll be hearing more about impact a little today. So that is already something the Federation has. And then just looking at climate transition, the world is in a state of transitioning away from carbon intensive energy, and that presents a lot of risks and opportunities. So, I think those top four cover everything from shorter term things to some mission aligned things. At the bottom are maybe more defensive things. In the middle, there's 6 and 7 around the role of fixed income and rethinking diversification on how to make more robust portfolios as markets get more volatile. But then on the two ends, items 5 and 8 are around just broader changes going on here. And number 5, embrace disruption. We all know that COVID for the last 2 years now has disrupted so many ways of working, so many ways of living, and that's creating some investment risks and opportunities. And then on the far right-hand side, reassessing sort of China exposure as a market as much as a risk politically and for other reasons. So I think I'm going to sort of end here and maybe look at turn it to JLens, and maybe just as an introduction, JLens is in the context of everything that the Federation has here for investment options. We put this in the invest category on the left-hand side of the screen here, and it's really that third piece that's available for donor advised funds. And JLens is focused on both screening and advocacy of mostly U.S. companies, and I think to just turn it over to highlight more about JLens and the advocacy, I think I'll turn it to you, Danny.
Texas, just really quickly, we do have a couple of questions in the chat. So the first question is about some guidance around how do I decide where my DAF funds should be invested? So do you want to take that, Texas?
Sure, I'm happy to take that. So there's a range of, there are different pools that are here on the traditional pools on the screen, as well as the values aligned pools. There are a few options by time frame. So if a donor is thinking about staying invested and not granting out the entirety of the donor advised fund assets within, say, a certain period of time. So if it's less than 5 years that the money's invested, we might consider the short or the moderate term, sort of 5 to 7, definitely the moderate term, and then longer than 7 years, we want to think more about the long term. So it has to do with the type of the time horizon for the time that the investments are going to be in the DAF, and then the difference between the traditional and the values aligned, or if you prioritize values aligned investing, which is sort of our core belief and the Federation's core belief, or if you just want index funds that have no ESG and no consideration of the sustainable investments, there are options there too. I know the Federation staff is very prepared and happy to have further discussions with you personally to help you make that decision on how their DAF fund should be invested.
And then Texas, there are a couple of questions about investment in the fossil fuel industry. So do we have a stance on Bill McKibben's recent attempt to encourage disinvestment from banks that are financing fossil fuel companies? That's one question. And then another one about, do any of the funds invest in companies producing tobacco or firearms? So maybe you could take those, and then I'll take the questions about Federation's policy on the minimum cash balance.
Sure. So the two points have to do with the screening essentially, and maybe the second question around producing tobacco or firearms. I don't believe there are any exposures to either of those in the portfolios now. And it's at least the values aligned investment pools, because managers are considering the environment, but also social aspects, which incorporates health and firearms, and for obvious reasons, those are not well aligned with promoting the S part of ESG. The fossil fuel company issue is a very interesting one because fossil fuel industry is huge. So banks are only one of the providers of services or capital to the industry. And I think the way we think about it and the way we choose managers is to consider the climate transition away from fossil fuels as a risk. So if there is a bank that has high exposure to providing a lot of loans to fossil fuel companies, those loans are a higher risk than others. We leave that to the investment managers to determine. We're not picking the individual stocks and bonds, but we are picking the investment managers who take all those things into consideration. So that is very much a consideration of the managers of these values aligned investment pools.
Great, thank you, Texas. So yes, the Federation has historically had a policy around maintaining a minimum balance of $10,000 in cash to enable us to have maximum liquidity for grant making. Otherwise, if the money is invested, then it just takes a little bit more time to liquidate the investments and free that capital up for grant making. If anyone has specific concerns about their fund, would like to talk to us more about that, we certainly can have conversations about it. It is, as much as anything, really an operational ease policy. It's not that less than that couldn't be invested. We've just really tried to streamline operationally so that we can make sure that first and foremost, we're able to make grants and respond to people's grant recommendations. But we'd be happy to speak with any of you if you have concerns about that policy and talk through what we might be able to do there. Okay, I think that was all the questions. Let's shift over to Danny and JLens.
Great. Hi, everyone. My name is Dani Nurek. I'm the Director of Advocacy from JLens. We're very excited to be on your platform. Just to give a little bit of background, JLens has had a really great year this year. We have 170 million invested in the Jewish Advocacy Strategy, which is our fund. And that's from over 50 different institutions, different Jewish institutions, ranging from foundations, federations, nonprofit endowments, private foundations, many different types of institutions. And just to share a little bit of what's on our horizon, we're very excited that we are actually in the process of creating a global index that will be in addition to the JLens strategy that will allow us to expand our advocacy work to Europe, where there's a lot of potential for advocacy. So we're very excited about that. What makes us unique from others in the ESG field is that JLens uses Jewish values to guide both of our investment decisions as well as our advocacy with companies. So I'll share with you a little bit about these pillars and how they guide our advocacy, and also share a little bit about our scoring methodology as well. So from our 6 pillars, these are how we do our advocacy. We have chosen these 6 Jewish values, and these serve as the key pillars for what we do at JLens. And all of them are based on Jewish values that we feel are very important. We also, how we operate is a little bit different. We use the value of hocheach tocheach, which means constructive rebuke, meaning that there's no perfect company, and any attempt to screen out a bad actor or invest just in a good actor would actually miss that opportunity for impact that you could have through constructive rebuke and being able to do the actual advocacy with companies. So I'll go through some of our pillars. So you can see this on the slide, and this won't necessarily go in order. But the first one I'll talk about is obligation to investors, from the Jewish value noseh v'noten be'emunah, which is conducting business in good faith. And some of the things we look at as far as this value is a company's transparency in terms of its governance structures, its programs, its policies. We look at board diversity. And some of the things that are under this category as well is that a company is being engaged and being responsive to the investor community. So to share an example, recently we sent out a communication to our portfolio companies around Tu B'Shvat and around sustainability. And we looked at which of the companies responded, and many of them responded with new sustainability initiatives. For example, a company called Applied Materials responded and told us about many new environmental community initiatives that they're doing in Israel. The second one, obligation to society, Dei Machsoro, which literally means helping those with whatever they lack. A really basic Jewish value that's inherently described in many parts of Judaism that we feel is really, really central. This value has many aspects underneath it. This informs our advocacy on equal treatment of clients and customers, on access to nutrition, to water, human trafficking. We recently, to give an example, we recently did a lot of work on the COVID vaccine. As in Jewish tradition, there's a Jewish law that prohibits businesses from charging exorbitant prices for consumer staples. And the vaccine is something that we viewed as a consumer staple. So we worked with companies like Moderna around their pricing structure and around sharing their proprietary technology with the World Health Organization. We also worked with Merck And after speaking with Merck, they recently announced that they were going to share their technology patents for a therapeutic drug that works against COVID. The next one, obligation to the worker, Lota Shok. This is where we advocate on a range of workers' issues, from gender pay gaps, fair wages, child labor, paid family leave policies, all of which are grounded in Jewish tradition's obligation to respect the worker. An example around this is we've been involved with companies who are engaged in the Uyghur region and in forced labor. And we've been part of an investor coalition who's worked on developing asks of these companies who are engaging in that region to ensure that they're not using forced labor. We've also been a founding member of a coalition that works around the retention of women in the workforce after COVID, as this was had a particular impact on women. The next one, obligation to environment, Bal Tashlit, do not destroy. We work on a variety of environmental issues, from reducing carbon emissions, chemical pollution, food waste, to also expanding renewable energy and renewable energy capacity. An example is that recently we spoke with Best Buy, and we encouraged them to not only have their own environmental targets for their operations, but also to set targets for their suppliers. And we've also been very involved in other investor work around this and many different coalition work. Particularly, we earlier mentioned the transition away from high carbon energy. And one of the things we've been involved in is work around the just transition, which is to ensure that when companies are transitioning to lower carbon fuels, that they are really ensuring that stakeholders are engaged, that this transition does not negatively impact communities and current employees of these companies. And then obligation to coexistence, Rodef Shalom, pursuing peace. A lot of the work we do in this area is around religious coexistence. And when speaking to hundreds of different companies, we see that JLens is actually the only company, the only organization that's doing work in this area. Over the past 2 years, we've engaged hundreds of different companies around this and been able to synthesize best practices and then highlight leaders in this field. So for example, some of those are Accenture, Cisco, CVS, just to give a few. And we've seen our advocacy in action, and we've seen our advocacy working. So for example, Cigna, which is a health insurance company, they became aware through conversations with us that their dress code policy was unclear, and they rewrote it to explicitly say that employees could dress according to their religious imperatives. And another example is Union Pacific, the railway company. We urge them to adopt a flexible holiday policy, to have floating days. And over a year, they did develop such a policy and now have 3 floating days that employees can use for their holidays of choice. And under this area, we've also been involved in asking companies to remove Holocaust denier literature. In a few big companies, it's come to our attention that various Holocaust denier books have been on their sites, and we've been working with companies and have been successful in asking companies to take these products down and develop guidelines for the future. And then lastly, support for Israel, Yishuv Eretz Yisrael. We encourage companies to expand their economic ties with Israel in alignment with Jewish and social and environmental values. And we're also the only organization that's counteracting the BDS campaign in this space, which tends to be really prevalent. So I'll go on to the next slide. Thank you. So how our scoring works is that if a company receives, it's a 6-pillar model, that if a company receives a 6, it's Metsuyan, excellent, and it's held in our portfolio and it's as an overweight. If a company is a 5, it's held in our portfolio at its ordinary weight as a tov, which is good. If it's a 4, it's held in our portfolio, but it is a company that needs improvement that we will engage in advocacy with. That's a tzarich tikun, and that will be held as an underweight. And then a 3 is a company that's not held in our portfolio. We call this nichshal, that they've had failed advocacy, that our advocacy efforts with them, or in general, the investor advocacy community efforts have failed. And then 2 would be lo hashpa'ati, which is a company that's irrelevant for Jewish communal advocacy. And 1 are companies that we call treif, that their sectors don't align with Jewish values. So for example, the tobacco sector. We also have a fossil fuel free option, which I think currently San Francisco doesn't have at the moment, but that's possible to add as well. And if we could go on to the next slide, thank you. So just to share really in brief, a couple quick examples of recent advocacy. So I mentioned the Best Buy example earlier. We've worked with them around their emission reductions targets. We've worked with Hormel, which is a food and meat company, around their best practices in developing a faith-based employee group, which we've identified is really helpful both for inclusion and for developing best practices around religious coexistence. We worked with Booking.com around their policies related to religious coexistence and really urging the company to ensure that their policies are explicit and communicated across all of their brands. First Energy, this is an example when I was speaking about just transition, that we've worked with them around their just transition policy to really ensure that local communities are not harmed when the company shifts away from coal, and to publish a timeline for this transition. Kroger, which is a supermarket chain, we've worked with them in providing, though they have done really well in providing affordable food, we've really pushed them to examine their internal diversity metrics and to create some sort of accountability method. And then Merck, I mentioned earlier, we've worked with them a lot about their drug pricing strategies and transparency. And this is an area where we feel our advocacy has been successful in them sharing the patents for their recent COVID drugs. And we can go on to the next one. And we're very proud that our performance, being able to have all of this impact and all of this advocacy, our performance very closely aligns to the S&P 500. And we feel very successful in that. Great, thank you. So if there are no questions, I will pass it off to Andrew.
Yes, thank you, Donnie. Thank you so much for covering it, covering the JLens advocacy strategy. So we spent a lot of time on the left side on the sort of invest element of what you can do with your philanthropic capital. And I wanted to spend some time really highlighting our impact lending program as a real additional vehicle around deploying your capital to generate beneficial environmental and social impact. So really, currently, our focus around impact lending is doing below market loans to community lending institutions. These are intermediaries that sort of on-lend our loans to the ultimate beneficiaries. And that could be individuals, nonprofits, small businesses, for really a set period of time at which that capital gets returned to every DAF. So that philanthropic capital can then be redeployed. It's that recycling that Greg was mentioning at the start. Christine, you can go to the next slide. Wanted to sort of take a step back and highlight sort of the why as a sort of philanthropic practice we're focused and invested in impact lending. One, we're really set on encouraging our fund holders to move their capital out of public markets and really deploy it into the communities in need to generate that impact, which is really central to the donor advised funds while it waits to be grant made out. We really think impact lending is a complementary to your grant making and really should be considered another tool in your philanthropic toolkit. We know that there's a real opportunity to multiply your fund impact through recycling your capital. And that recycling actually happens in sort of two levels. So those borrowing institutions, they make multiple loans to those ultimate beneficiaries over the course of the period of our loan. And ultimately your recommended loans comes back into your DAF so you can recycle it back into another loan or ultimately grant it out. And really, this program is designed to be radically inclusive, as in any DAF can recommend an impact loan at a minimum of $1,000 or more. And then by pooling those commitments across our community of philanthropists, our portfolio, we make a larger single loan to those borrowing institutions, thus sort of creating that collective impact that's sort of potentially bigger than one fund can achieve. So what does our portfolio look like today? Christine, you can go to our next slide. Through the generosity really of our donors, we have been able to build our loan portfolio to 21 million loan in the past 2 years. And I put in the chat, what does that portfolio look like on an institution by institution basis? But that's really coming from 92 DAFs and supporting foundations and going to 14 different borrowing institutions. And you can see who those are in the chat. Our lending activity has really been in 6 major issue areas, which very much align with our grant making areas of interest. And I'll highlight a couple of our largest buckets to date have been supporting the Jewish community. That could include, as you may have heard, our initial COVID response loan to Hebrew Free Loan, and that also encompasses ongoing opportunities to provide loan capital, Hebrew Free Loan, as well as our loan to Ogun, which lends to underbanked small businesses in Israel. We've also seen sort of major support for small business relief, and we saw that initially as it relates to COVID relief, and now we're seeing opportunities to support rebuilding and resilience among our small businesses, both locally here in the Bay Area, as well as nationally. And so I want to thank, for those of you on the call who have participated in impact lending, I want to thank you so much for that initial support. And if this is of interest to you and you want to learn more, or you want to step into some of our open opportunities, I encourage you to go to impactlending.jewishfed.org to explore that menu. And I'm here as a resource to you to talk about this exciting program. So I want to pass this back to Tanya to open the floor to any questions.
Thank you, Andrew. So it does look like we have a question about the impact lending options. I see, Andrew, you put the link in the chat. That is probably the best way to go and take a look at what's available now. What we're really excited about, not only the opportunity to make a difference with philanthropic capital in a way that's complementary with grants, but also that this is a minimum of only $1,000. So I know we talked a moment ago about the $10,000 minimum to invest. That does not apply to our impact lending options. We would like to bring as many of our fund holders into those as possible. Generally, they're about a 5-year long term. Some of them have a return rate, an interest rate of about 2%. So as Andrew said up front, they're below market rate loans. That's why they're helpful, because we're loaning money into communities that otherwise don't have access to capital. Many of them are considered financial deserts. And so by loaning it at below market rates, the institutions we're lending the money to can then on lend to people in the community, people who have small businesses, nail salons, food trucks, restaurants, laundromats, you name it. It's every small business you can imagine. And they need capital, especially in this post-COVID period, COVID rebuilding. That capital is essential to keeping their businesses afloat and thriving beyond this pandemic. So if you take a look at that link in the chat, you can see the full array of opportunities available, including Hebrew Free Loan. We've loaned them close to $6 million over the past 2 years since the pandemic started. That money has been repaid, and we're now looking to make additional loans available to them. So that's still, it's open again to any participants. And that does not pay a return at all. I'll be very clear here. Hebrew Free Loan makes loans at 0%. So they don't pay us any interest. And so we don't have any interest to pay back into the DAFs. But the money is being utilized in really productive ways, ensuring that the Jewish community in Northern California has access to loans up to $15,000 for individuals and families, $20,000 for small businesses. So we're really proud of our ability to provide them with capital that they can use to make more loans in the community. Okay. Other questions? I don't see anything in the chat. Questions for anybody? Questions for Rebecca or Greg, the Mercer team, for Donnie from JLens, Andrew, myself? We are happy to entertain any questions that are on your mind. What is the need for more loans? This might have just been a question to me. I believe that may be specific to Hebrew Free Loan, since that's what I was speaking about. They are looking to reach more people beyond the immediate Bay Area. So the loans are generally kind of everything you can imagine. We have people who are struggling to pay their rent or their mortgage during the pandemic. We have people who needed to retool their business. In one particular case, there was an ice cream store here in San Francisco that needed to shift their business model from packing a lot of cups and cones to packing pints, because people were ordering ice cream to take home during the early days of the pandemic. So our investment, or our loan, I should say, allowed them to borrow money to retool their business to adapt to the pandemic environment. We also support Hebrew Free Loan making student loans. They also have a program to make loans for fertility treatments. Andrew, are there any other examples you can think of?
No, I think those are wonderfully illustrative, Tanya.
So it's a whole range. They have a very proven track record, Hebrew Free Loan, of evaluating creditworthiness, ensuring that the borrowers have a guarantor. In case they are unable to pay the money back, then the guarantor would step in. And that way the money gets returned to Hebrew Free Loan and returned back to us so it can be reinvested. The longevity of Hebrew Free Loan depends upon their ability to make good loans that they collect on and that get repaid over time. Okay, here's a question about timing considerations for transferring funds into my DAF. So aside from the end of the tax year and the tax deductibility for calendar year 2022, there's plenty of time for that. We will take contributions at any moment in time. We will take stock, wire transfers, a check in the mail, any type of contribution, and then we process it as quickly as we can, put it into the DAF so that it's available as soon as possible for grant making or investing, whatever you recommend. I think there was another question. Okay, so yes, this was another private question about how many options someone can invest DAF assets into. So generally we require that if a DAF is going to be invested in any of our pools that Mercer described, they choose one. So either the short term, which is a money market, medium term, long term, active, which is ESG, or passive. So one of those pool options for the DAF assets, plus JLens, plus an impact loan. So you can have a combination of essentially 3 different things, plus cash. So the Mercer pools, plus JLens, plus an impact loan, or more than one impact loan, depending on the size of the DAF. We don't put a cap on that. We've had people invest $1,000 all the way up to $800,000 in a single loan that we made. And we've had people do multiple different loans because they're interested in supporting different things with that capital that they don't need for liquidity purposes. So this is capital that would otherwise be sitting in cash or invested in the stock market. Some donors have chosen to have that be in an impact loan for 5 years as a way to complement their grant making. The $1,000 minimum also applies to JLens. Yes, thank you for asking that question. $1,000 for JLens, $1,000 for impact lending, and generally $10,000 for the pools. These are great questions. Thank you, everybody, for your engagement and your interest in really working with us here. I got another message about the return on investing DAF assets while it's waiting to be gifted or granted out. So that will depend on the investment. So Neil spoke earlier about the performance of our core pools, the ESG and the passive pools. Those returns have been quite strong because of recent stock market performance. As he said, high single digits into the low 2 digits return rate there. JLens has matched that pretty closely. And then impact lending, anywhere from 0% to 2%, depending on which loan. So again, that is really impact first investing. It is not meant to be all about the money that gets returned beyond the loan amount, of course, the capital, the principal. That is really about the impact. Whereas the investments in the ESG and other pools are really designed around maximizing return. Andrew, are there any other questions that you can see on your screen? I think I got to them.
Not that I can see. I think we got it all.
Well, if there are no other questions, I think we can end this webinar here. Feel free to reach out at any time to our team, to your philanthropy advisor. We can put you in touch with JLens or Mercer, or Greg for that matter, if you have interest in having conversations with any of us. Thank you again for joining us. We're delighted to have you in our Donor Advised Fund community. Delighted by your engagement, your interest, your generosity, and your overall philanthropy. Thank you for being with us.